Okay, Record's video on Sunday, the 20th of May, 2018. Do hope you are doing well. So we're back in Australia, not in Sydney this time. We've come a little bit further north to a place called Noosa, which is in Queensland. It's kind of mid-autumn here, still beautiful and sunny and bright and pretty warm, which is nice. We always get emails from time to time saying, where in the hell are you? What kind of time zone are you trading this time? So back in Australia, so that means the trading day starts at 11:30 p.m, which is not my favorite, but anyway, what can you do? So this video, I'm going to talk about bonds and equities. We got cyclical turning points in all the major time frames kind of lining up for this week being, I think, really important in bonds and equities. We've traveled pretty far in terms of the bond sell-off, and we've also kind of played back up to recent highs on the equities. And I just think this week, with all these turning points kind of coming together, I think it's going to be really important. So just want to kind of let you know about that. I'm going to run through some of the bond charts where you can see it's exactly the same picture in all of them kind of lined up. But let me just show you the details. So this is the usual setup with the multiple time frames view of, this is at US, so that's the continuous contract of the 30-year bonds, US bonds. This is the system view where you've got weakness shown in white bars, strength shown in red bars. We've got our cyclical support and resistance on all three time frames, all on one chart. The big bold kind of support and resistance lines are the highest time frame. The next one down is the medium time frame, and these little light bars in here are the lowest time frame. So that's the system view. And then this is kind of the detail. I like looking at the detail. It shows me kind of the strength of the buying and the selling using better momentum down here. And then the blue bars show professional activity and the yellow bars show amateur activity. And it's kind of the detail behind the system that's of interest to me. So bonds, this is what I'm going to turn on this chart. So better sine wave is used to figure out the cycles on all three time frames, the low, intermediate and highest time frame, and from then we generate the support and resistance lines. It's not a one-to-one correlation. When you see a cross, that doesn't mean you've necessarily plotted support or resistance. You've got to see kind of price confirmation. But this is what I'm interested right now. So the fast lines are shown in red. The highest time frame is the bold lines here. So we've had a cross where the fast line has crossed above the slow line back here, and that's why we had the support come in on the highest time frame. So support in the highest time frame is already in. With the lowest time frame, you can see here with the little weakest little bars here, we've just had a little cross down here. We've got this red line above the blue line, so we've had a cross there on the lowest time frame, and with Friday's activity, it's put in a support there at this 140, 430 seconds level here, which happens to be a little pullback to end of trend signal, a downtrending signal there. And you can see on the intermediate time frame, so this is these medium kind of strength lines here, fast and slow. The fast in the next day or two is going to cross above the slow line, and so we're going to be looking for a support on the intermediate time frame. So that means that we've got a confluence of support levels kind of coming in. Now, that's not enough to kind of turn a market. I always say big things happen when triples kind of come together. We'll have three supports kind of tightly bound down here in the 140, 141 kind of region down here probably this week. But that's not enough to turn a market. What turns a market is where all the sellers have sold, and we've got a lack of selling going on. So we had down here an exhaustion selling back a couple of months ago, and then we've tested back in, and we've had a bullish divergence pattern come in. We pushed a little bit lower, and the selling is really weak. So we're running out of sellers on the downside, and we're coming in with cyclical kind of turning there. I would like to see a blue professional bar. If we take off this week with a blue professional bar that kind of gets the thing going and kind of starts the move in the opposite direction, a trending move in the other direction. That'd be kind of interesting. I don't know if after Friday's activity we're going to have another kind of push down Monday, Tuesday or something like that for a down blue professional bar, but something like that down here to signal that the professionals, because they haven't been active, for a couple of months, they were buying this dip kind of down here and they've just been waiting and waiting. So kind of want to see them do something soon in order to give confirmation that this is the end of the down move and we're going to have a push back up into the next support to resistance move on the highest time frame. System wise, you can see we had all this weakness. We kind of fell out of bed here. Exhaustion, sell, bullish divergence. A little bit of strength here, but we're still showing weakness at this point here. So all I'm saying is this week we're going to have all those cyclical supports kind of coming together for the system to turn around and show us in a proper uptrend. We need to be starting breaking resistances on the upside. So it's an important timing, I think, this week, and when that level kind of comes in on bonds, that'll be interesting. So same picture here on the 10-year. 10-year, we've actually, 10-year, we've actually got a blue professional down bar in the last couple of days, kind of down here. So let me just switch on those. Better sine wave, bang, bang, and here we go. It's a little bit different. Didn't check this before I recorded the video. So we've got this support on the highest time frame. We've gone a little bit past the support on the lowest time frame, and we've still got to put in a pullback 20 trend. We're well past the support on the intermediate time frame. So different cyclical picture on the 10-year, but we've also got exhaustion, sell, bullish divergence, and a little bullish divergence. Another one kind of come back in, and this blue professional down bar that we've bounced back off from. So we've traveled pretty far here, and we've got to be thinking about finding some kind of levels from which to have a little bounce from. A little bit counterintuitive. A lot of people saying, the bond market's kind of in free fall or whatever. But I'm guessing this week it's going to find a level and start to bounce from it. Here's the 10 TLT. So this is the ETF that follows kind of the long-term US government bonds. It's a combination, I think, of the 20 and the 10. Anyway, so this one, prettier kind of picture going on here. Again, let me just show you these sine waves. Switch those on, and here we go. So huge confluence coming down here. So on the lowest time frame, we've got a cross in there that's put in our pullback to end of trend. On the intermediate time frame, they've already crossed there. You can see the red is just above the blue, kind of down there. And this is a pullback to end of trend on that intermediate time frame. So that's going to be pullback to end of trend on the lowest time frame, pullback to end of trend on the intermediate time frame. They start rippling through the time frames. So that's a really important kind of level. Then on this left shoulder, we've got our exhaustion sell. We haven't got a bullish divergence in yet. We've got a blue professional bar that came in at those lows at 16. So, and we've kind of bounced from there. Again, I think that's kind of interesting. And then on the highest time frame, we've been running support, resistance. Down here, we're looking for the next support. And we've had the cross a few weeks ago, in fact, on the highest time frame. So we're looking for that support on the highest time frame. So all of that says bonds, I'm guessing this week we're going to be trying to find a support level and bouncing from there, and we'll kind of see where that goes. The triple short on the other side, which is a vehicle I've kind of talked about quite a bit before. This is TMV, so it's pretty aggressive. It's a triple shorting the bonds, and this is showing the inverse picture kind of up here. So again, just turn these on, bang, bang. And then there we go. Look at that all lining up together. So we've got the lowest time frames put in an end of trend. The intermediate time frames crossed. That'll be resistance on the intermediate time frame. And then the highest time frame, they're looking for that cross as well. Not quite crossed yet. In the background, we've got exhaustion by bearish divergence. And we kind of run back up. And we've got this blue professional up bar at the highs. If we break below the lows of that, that'll show that they were selling into that strength. So there we go. All of those things are showing us that bonds are reaching some kind of a bottom here, and I'm guessing a bounce this week from there. Now, bonds and equities don't always move kind of counter, but sometimes they do. And we've almost got an inverse picture kind of happening on equities. So with E-mini, I think the same thing holds for all of the down NASDAQ, Russell and so on. But again, let me just show you what's going on here. So sine wave, turn that on, and there we go. We've got cyclical resistance on the lowest time frame has already come in, and that's plotted here. The intermediate one is about to cross in the next day or two, and that will be a pullback to end of trend on the intermediate time frame. And I talk about these time frames, the end of trend signals rippling through the time frames. We start on left shoulder here, not quite a left shoulder because we had a higher high here, but first in the sequence is the lowest time frame, and then we have the intermediate time frame, and from there we often have a big kind of sell-off until we find support on the highest time frame, when these two kind of come together kind of in this region and then bounce from there. So that is due this week, and then this coming week. This last week, you can see the activity that we had the last 4 or 5, 6 days there. We had some really low range, low volume, low average trade size amateur activity up here. And that's kind of a bit worrisome, because in the background we've got exhaustion by bearish divergence. We got that weakness starting to show. We've found a bottom here but kicked back up, and there's no demand. There's no one kind of getting us going here, and these are all the amateurs kind of playing at these highs. That's not good. So I don't know, we could kick through on Monday, Tuesday until we find that end of trend on the intermediate time frame and then roll from there. I'll just be kind of watching it. On the E-mini range chart, again, this is the handy dandy range chart, which went absolutely nutso at the beginning of this year, come February, with those just monster ranges. These levels for the median low, median high kind of thing used to be, 12 and 16 or something. I mean, they've blown out to 21 and 36 to show the levels below which we've got low range days and high range days. We've been very fortunate the last several months with all the range that we've had for trading, which has kind of been great. You've been able to move out your targets, but the stops, I don't know. I've always kind of kept my stops around kind of 4 points. But this is all this activity over the last 6 days, all these low range bars. So there's not a lot of interest kind of up here, which is kind of interesting. And then back it down to a tick level chart. The highest tick level chart I look at is the 4500 tick bar chart. Let's just look at this from a kind of systems view. So beautiful uptrend back here, and ran to 27s from the 26s to the 27s. Exhaustion by bearish divergence, flush, and then we've got all these end of trends go on, and then finally a pullback to end of trend on the highest time frame. So this is the rippling through of the time frames. So we've got pullback to end of trend on the lowest time frame in there, pullback to end of trend on the intermediate time frame. We come back up, push even further through, and then we're putting in pullback to end of trend on the highest time frame. So it's just a question of just slowly working through that energy, as kind of maxing it out, pushing into those highs and testing them, see where we're going. Now, in the background then, so what we have is over the last several days, we've found a high, resistance on the highest time frame with exhaustion by bearish divergence, some end of trends kind of go off here, and we've come back and we're settling at the support. We are dangerously close to this support level on the highest time frame here. In the overnight and Monday morning, we could just drop through here. The 2710, down to 2705 levels, absolutely critical. If we start to see those numbers print, we could go for a little waterfall dive. Because we've had our exhaustion buy and bearish divergence run out of buyers, we could push into a trending move on that highest time frame. And Friday, Friday was a really tricky day. I had a horrible day on Friday. It was so slow. I should not have been trading it, and it was obvious that it was so slow. We did 11 points of range. We haven't seen something that low in a long, long time. And the blue professional bars just came in at the end of the day. That's kind of squaring off. That's the end of the day, end of the week. So not sure about kind of directionally that particularly helps you. But anyway, just watch that level here, because we start to drop through there. We could start ourselves into some weakness for a while, and it'll be strength in bonds and weakness in equities. So watch out for that this week.